Welcome to today's edition of Toggle's Daily Video Insights. For those of you joining us for the first time, my name is Jan. I'm one of the co-founders of Toggle, and every market trading day we take a deeper dive into one of many insights that Toggle generates across thousands of US equities to really give you a sense of which fundamental drivers might matter for what stocks and how it might impact them. If you'd like to see more of these, sign up to our YouTube channel at Toggle AI, or just check us out on toggle.global and you'll be able to test drive Toggle yourself. That's the system that we're going to be using here today. Now the focus is going to be on Disney, a company many of you know, the company of Lion King, the company of a number of famous hits, and currently also a big competitor to Netflix. Now Toggle has been quite consistently positive, as you can see here by looking at these past insights on the prospects for this particular stock. Now, most recently, it's generated a couple of really interesting insights that have to do with a combination of sentiment, improving economic prospects, and so on. So we're going to take a look at this latest one, which suggests that there could be over 20% upside within the coming months for this particular stock. Now, why is that? So Toggle has looked at 16 similar occasions and concluded that this particular combination, and we can look at this and why it might move, of basically both the increasing investor optimism, relatively stretched to the downside short-term momentum of the stock because of this bit sell-off that we had here, and reducing geopolitical risk has historically been quite positive for this particular stock. Now, it's definitely true, and this is a caveat, that a lot of these episodes were really concentrated in a period between 2008 and 2016, and so this is something you need to keep in mind. But nonetheless, it looks like if you look at the past performance, it was definitely quite compellingly positive, and as you can see, although you do need to respect the stop loss level, that a lot of the upside was here in the 20% range, occasionally even quite a bit more. Now, what is it that exactly we're looking at? So as you look at the chart, the starting point of 186.02 suggests that something like 20+% move would see the stock trading in the 220s. But again, as we saw from the past performance, it's very important that at 166.59, you really reevaluate the thesis and potentially cut your losses, because there might be some other driver that instead is more relevant for the stock price at the moment. So again, the key thing really is to make sure that the stock price really does stay kind of within this range, and so then you could potentially see the realization of this profit quite a bit sooner than 6 months, and potentially quite a bit more than 224. So again, this is based on the 16 episodes that we had seen previously, and this is effectively just saying, were similar conditions to happen this time around, this is what we could see for this particular stock price. In this much for Disney today in the daily brief, which by now should be in your mailboxes already if you subscribe. If you don't, please go to toggle.global and you can do so right there. We also discussed the outlook for pot stocks. As you know, they still are not allowed to trade on the US exchanges, but actually the law and the regulatory environment for this industry is changing quite rapidly, and so for anybody who's looking to potentially get involved, it's a good moment to take another look at all of these stocks and what the future holds. Thank you for your attention, and we'll talk to you again tomorrow.